What's up, everyone? Let's talk about another stock today. Well, before we go into that, I am building a bridge account, and that consists of dividend stock, so I can fund my early retirement. Now, come with me on this journey to see what I am building and see how it works out. If you haven't known, I am trying to get into early retirement with this dividend bridge account. Now, before I get into all this, everything like that, what changed my method of investing and why I picked dividend is because of this video or this clip right here.
Never buy a stock that doesn't pay a dividend. That has been your advice through and through. Why are these stocks more attractive?
You look at companies that don't pay distributions, don't return capital, how risky they are. Take a GoPro, for example. I'm not just picking one company. I'm just giving you a good example of a company that basically has lost 70% of its value, never returned a dime to shareholders. Or how about a company that's been around much longer, Yahoo? Never paid a dividend. It's never made money for anybody except all the CEOs that have gone through there and got whacked.
The reason why I pick companies that I can trust and rely on is because what Warren Buffett said. And this is what Warren Buffett said about buying stocks.
It rejiggered my mind, and when I read the book, The Intelligent Investor, and from that point, I never bought another stock. I bought businesses that happened to be publicly traded, but I became an owner of a business, and I did not care whether a stock went up or down the next day or the next week or the next month or the next year, and I didn't have any idea what it would do. I didn't know what the stock market would do, but I knew businesses.
Now that you know that reason why I'm buying and how I'm buying stocks, I am buying dividend companies for passive income. Now, what is passive income? According to this video, these are the only two passive income.
Passive income exists. I think the reason so many scum buckets are making so much money is because you're buying stupid courses over and over, thinking there's some magic formula for passive income. Passive income looks like this. You take money that you can afford to go to zero, and you put them in the two places that have historically created passive income. Public markets that you don't care if it goes up and down and you just wait to the end, or real estate, and you hope that your real estate area doesn't get crushed. Everything else almost doesn't exist.
Let's get into this. What is my requirement for my dividend portfolio? Well, of course, it has to pay a dividend. Number two, it has to be financially stable. And number three, it has to have good growth opportunity. And those are my three requirements. Now, the company I'm looking at is Nike. If you don't know what Nike is, here's a clip about Nike.
Nike is the world's largest sportswear brand. This year, the company is on a mission to get its stride back. This week, the company posting its first earnings under new CEO Elliott Hill.
Nike beating on the top and bottom lines, but its sales fell 8%.
Analysts say it's the beginning of a long turnaround for the company, after what should have been an Olympic gold earnings summer.
In that clip, we saw Nike is a sports brand, and they make all type of company, and this is their leadership. Now, what is their mission statements? To bring inspiration and innovation to every athlete in the world. And they make sport brands and sport product. And I'm looking into them. I thought it would be a pretty good company to buy into. I haven't looked into the stock yet. So let's look into the stock. So Nike, the stock, let's see how they've been doing for the last year to date. Year to date, they're down negative 2.25. Don't looking too good for them. 1 year is negative 8.27, 3 years is negative 33.34, and 5 years is negative 34.19. That does not look like it's doing very well growth-wise, but before we assume that it's a bad stock because of the charts, let's look at what the dividend payout is. So the dividend yield is a 2.16% with the annual dividend payout of $1.60. And it has a dividend growth of 8.11% with a growth for 23 years. That's pretty good for growth. And The dividend growth for 8.11. That's pretty good. Dividend payout's not that bad. So yes, it paid dividends, so it meets my first requirement. But let's look at the finance. And I like to use finance on MSN because it tells me everything I need to know. And if I don't know what it is, I can click over here and it'll tell me. But the very first thing I like to do is see if the company's been growing year over year. Because if the company's growing year over year, that means that it's opportunity of growth. Now, I'm going to look at 2023. It grew $0.2 billion. And then to 2025, it dropped about $7 billion. Yeah, it doesn't look like the growth was doing too good from 2023 to 2025. Now, let's look at their gross margin, see if it's worth purchasing, if they can keep up with the dividend yield. And this is where I see if it can keep up. It has a pretty good gross margin of 42.73%. But the issue I have is the net profit is 6.95% with last year. Because the year before was 11, before that was a 9.9%. So if they kept at 10%, I'll be happier with the stock, but they keep it at 6.95%. So it looks like they don't have a great profit margin for my preference, but they do have a good growth margin. Now, the issue I have with it for the growth reason, for the stock purpose, is it is not growing. In 2024, it dropped to in 2025 in the profit margin. Now let's look at the balance sheet. How have they been doing? And let's see if their current asset plus fixed asset is more than their liabilities and long-term debt. They owe about $18 billion and their current asset is $23.36 billion and fixed asset is $13.22 billion. So yes, it is worth more than it owes. So that's a good sign. So let's go into the cash flow. Let's see how the cash flow been going. This really tells me how well a company is doing, because if they're using more money or are they going to have more money in the account. And operation cash flow from 2024 to 2025, it dropped by half. Well, that kind of makes sense. But the issue I have is the free cash flow. They used $3 billion or $3.4 billion on something, roughly. So it dropped $3.4 billion and it doesn't seem like it is going to be a very good company to invest in financially. The reason why I say financially it doesn't look good, it looks like they're losing market share according to the financial statements. Now, let's see what the analyst tells us to do. The analyst tells us to buy it. Well, I think the analyst is wrong here, but let's see if they hit. So every quarter they've been hitting their revenue. So they've been hitting their revenue every quarter, so that's a good thing. And let's look at the investors, see who's buying and selling. So BlackRock looks like it bought some. Vanguard looks like it bought some. State Street looks like it bought some. And Capital World Investment looks like it bought some. Okay, so it looks like big corporations are buying into this stock. So, okay. So if big corporations buying it, does that mean I should buy it? Now, it does say it's bullish. But let's see what AI say. So, first thing, it says in AI right here that revenue grew worse than the peers. Yes, I see that. The EPS year over year is forecast to decline. Okay. The EPS has declined year over year. And the P-S multiplied above peer average is low. Now, let's look at the valuation. It is above the industry standard, but it's only rated out 2 out of 6, and I agree with it. It's not that good. Earnings, it is a 0 out of 6. So they're not earning, they're declining. Future growth is a 0 out of 6. I also agree with this. Historical performance is 2 out of 6. And yes, I agree with this. And financial health of the company is 5 out of 6. Yes, I agree they have a lot of money in the bank and they are healthy, they're staying alive. So, yes, I agree with AI on this. And overall, AI rates this, it looks like a 2.5 out of 6 is what AI rates this. Now, what do I think about this stock? Am I going to buy this and put it in my portfolio? No. There is no future growth. It does pay a good dividend. They're financially stable, but according to the statement, they are losing money. And my third requirement is they have to have a good growth opportunity. This does not have a good growth opportunity. It is a steady blue chip company. So if you're looking for a steady blue chip company to add to your portfolio, I don't really recommend it, but this one be safe bet. They're not really growing. It's what I see in the chart. It looks like it's actually losing money or losing profit share or market share. So I don't recommend buying this stock. Now, if you want to buy it, do your due diligence and make sure you see why you want to buy it. Maybe they're going to rebound. Maybe this is their low point and they're going to recover. It's a good opportunity. But personally, with so many people out there personal branding, making their own clothing lines, Nike has a uphill battle to face, especially since the personal branding is coming from the people they are sponsoring. Everyone saw what Jordan did. Everyone's trying to make their own brands. And will it be successful for them? Maybe, maybe not. But at the end of the day, Nike hasn't been doing too good. And I just can't buy it into them until they start winning back market share. And even AI is saying that they're starting to lose more and more market share. So the growth of the company is not going to be there. But you figure out what you want, like, subscribe to my video, and that's all I got for you.